Why sit on $344 billion in cash days before the CPI print? Not because of fear, because patience priced correctly becomes profit. Those people chase a headline to feel in control. Wealth often comes from the opposite. Quiet preparation while everyone else argues about tomorrow's number. Understand what waiting really buys you, and you stop worshiping predictions. You start respecting process. Optionality, price versus value, and the psychology of liquidity. That's the whole story. And why record cash before a volatile report can be the boldest move of the year. In the next few minutes, you'll learn 3 reasons to wait with that much cash, even when markets beg you to act. Let's see the retail mistake that empties accounts slowly, not in a day, but across years. You'll leave with a checklist you can copy today, and a watch list, buy zones, a small cash sleeve, scaling rules, and humble exits. No predictions, no magic symbols, a repeatable way to be ready when price and value finally drift far apart. If you follow the rules, headlines stop owning you. You start owning decisions. A record cash pile says 2 things. Today's prices don't pay enough for the risk you'd take, and better prices usually appear when emotions run the show. CPI is a headline that stirs emotion. When a number moves the narrative, spreads widen, liquidity thins, and good businesses can look temporarily worse. If you trade on mood, you'll be early and wrong. If you invest on value, you'll be patient and prepared. Discipline doesn't predict the print. Discipline prepares for mispricing. The job isn't to guess the next digit. The job is to know your price before the crowd forgets theirs. Cash is optionality. It's a permission slip to act fast when quality gets mispriced. Most investors see cash as dead weight because it doesn't do anything today. Optionality isn't about today. It's about being the only buyer who can move tomorrow. When a great business is marked down for noisy reasons, the phone rings for people who can wire funds now. Speed is an edge. Opportunities don't send calendar invites. They appear when the story sounds worst, and they close while the crowd debates. Optionality means you don't beg for capital. You bring it. In panic, prices change faster than opinions. Boards, committees, comment sections. Everyone needs time. Markets don't give time. Optionality lets you say, we know the business, we price the risk, we have the funds, execute. Think of it like keeping dry powder, but with a plan. Not buy the dip because it dipped. Buy the business when the gap between price and value gets silly because you prepared. Optionality turns hesitation into entries and noise into inventory. You're not timing a headline. You're financing conviction at the moment conviction is scarce. You don't buy stories, you buy businesses. Price is what you pay, value is what you get. A fat pitch isn't a 5% coupon. It's a wide, forgiving setup where price sits far below value, a setup where even conservative estimates still work over time. Fat pitches are rare. Most days serve average pitches. Decent companies at okay prices. The costly mistake is swinging at everything, because doing nothing feels wrong. Forcing a pitch is fatal. Waiting for one is boring until it's obvious. Then it looks like genius. The patience premium is real. When crowds add risk, when narratives heat up, they want to feel smart. When margins of safety widen, they're too tired or too scared to buy. Because liquidity is a shield on the on the way up and a sword on the way down. Sitting on cash is not doing nothing. It's doing something precise. protecting the right to be decisive later. If you've ever been right, but you couldn't add because you've lacked cash, you know the pain of illiquidity. If you've ever averaged up into nonsense because you had cash but no rules, you know the pain of undisciplined liquidity. This fixes both. Most investors obsess over entries and ignore exits. They buy because a chart looked friendly or a voice was confident. They sell because a headline yelled or a stranger sounded sure. That's not a process, that's a mood with a brokerage account. A process asks, what is this business worth? What price gives me a margin of safety? What would make me wrong? And how will I know? If you can't answer before you click buy, you aren't investing. You're hoping. Process beats prediction. Rules beat moods. Over time, discipline compounds. True, in calm years, cash bought nothing, while assets marched higher. But in panic years, cash can buy decades of returns in a single month. That's the trade. You accept a small known cost today to keep a large unknown opportunity tomorrow. It isn't about yield, it's about readiness. Inflation is real. So is the permanent loss of capital from paying too much for too little. One stings, the other scars. Choose the pain that buys you options rather than the pain that buys you regret. Picture a durable, compounding business with simple economics, steady cash flows, and managers who allocate well. Headline hits, the narrative sours, multiples compress, funds face redemption, sellers need out. Nothing about the long-term earnings power changed. The price did. Your watch list has a buy zone you wrote in calm weather. Your cash sleeve exists to finance conviction, not to time gossip. You scale in at your levels. Weeks later, emotion fades and value reasserts itself. The crowd calls it luck. It wasn't luck. It was a checklist. Build a watch list of 10 simple, durable businesses you can explain to a teenager. No complicated miracles. Right, buy zones before the storm. Actual numbers where you'd be thrilled to own more. Decide your margin of safety now. 15, 20, 30% below value. Fund a small cash sleeve, not to guess headlines, but to act when your price arrives. Scale in once price breaches your level. No hero trades. If facts strengthen, add within limits. If facts change, stop. If the margin of safety disappears, stop. If it never appears, do nothing. Discipline is a checklist, not a mood. You can't control the report. You can control your rules. The market will tempt you daily with movement. Value rewards you slowly with compounding. Cash isn't fear. It's permission to be brave when others can't. Hold your rules tighter than your predictions. The patience premium goes to the prepared. If this helped, subscribe. Next, we'll walk through the one filler most investors skip and why skipping it costs them the fat pitch.